So all it would take would be a very small amount of the top 10 companies in America, talking at 2%, to buy up the entire value of the gold mining sector. So what I'm saying is, if we do have a crash, and I want to stress I'm not forecasting this, but it is a possibility the higher we go. If we have a crash in the stocks, some of that money would be looking for a new home. And if only a small percent of that money, 1% or something, looks out and tries to find the gold mining sector, it would bring those valuations of those undervaluations of the gold mining stocks back to a normal valuation.
Friday, July 19th, 2024, Monaco 64, home of alternative economics and contrarian views. So you might be wondering where Clive has been the last couple of weeks. Well, he was away on holiday and he's back. Clive, welcome back.
Thank you, Mario, and great to be back, and thank you for having me on your show.
Oh, you're welcome. And it's always
there's been a lot going on in the last couple of weeks, mainly regarding Mr. Trump. What have you got to tell me about that?
Yeah, I have tried to stay away from all the speculation of what happened on July the 13th. There's a lot of theories of what happened. But one thing's for sure, I think it's led to the acceleration of Biden's demise. I think he's expected to step down from running this weekend. And you kind of wonder if he's not fit enough to run, is he fit to be president? But that's a different question. I was listening this morning, Clive. We're in London, for those of you who don't know. So I didn't stay up to watch a Trump speech at the Republican National Convention. But one of the interesting things, we'll focus on the economic part. There's a few interesting points. One was that he said he's going to end the Green New Deal. He called it the Green New Scam. And to be honest, I'm glad he's doing that, because I think this climate change agenda is overdone. It's just a scam. I know maybe YouTube might censor that, but if you look at the amount of carbon dioxide in the atmosphere, it's 0.04% on the planet. So let's say the UK, we emit, I think, just under 1% of all carbon dioxide emissions. And if you multiply 0.04% by, let's say, even 1%, it doesn't make any difference whatsoever. So I think that's a good thing. How it's going to affect the rest of the world and their move to net zero, I don't know. Here in the UK, we've got a new minister, Ed Miliband, who wants to, he wants the whole grid to be net zero by 2030. The other thing he said is that he's going to cut taxes. He's going to start drilling oil and gas from day one. And he's going to also allow, he said he's going to put, if the Chinese, for example, want to sell cars in the US, they have to go and build the plants in the US and employ American people. He said he's not going to, well, they can go to Mexico, he said, but if they try to sell it to us, we're going to put 100 to 200% tariff. But, and the other thing he said, he's going to cut taxes, which I think is a good thing. And he's going to bring inflation down, he said, which I'm not too convinced that it could happen if the economy starts growing. He kind of has a plan that Liz Truss had, I would say. And the other thing I would say, if he's going to be protectionist, are countries like China and other like Japan are they going to keep buying treasuries? That's yet to be seen. So yeah, that was what he talked about economically. And I think it will be a vote winner. Whether it will work, I don't know. But I think that will bring prices of energy down, at least.
I mean, I think the important thing is the question of for inflation is whether people actually trust the currency. There's two sides to inflation. One is the price of the retail goods that you buy in the shop, your pizzas, your sausages, your cabbages, and the second one is everything else you spend your money on. Now, we're living in a world where a lot of what people consume is not in short supply. It's effectively an infinite supply. If you wanted to own 10 iPhones, Apple could make them and they would supply the market with that. And it wouldn't cost them any more to make 10 iPhones than it cost them to make one, because the delivery charges are the same. The research and development cost is the same. The only thing which maybe slightly changes is the driver who delivers it to your house, and a couple of other things. But a lot of things are expandable, so it doesn't really affect the retail price index that much when we increase the quantity of money. But what does change are the things which are in short supply. And obviously we've got labor. Labor's in short supply. If you print more money, everybody's going to demand more, a higher wage, and there's going to be more competition for that labor. So is land and housing in some places, certainly in places where there's jobs. Those are factors which go into the price index for some people, and the wealthier you get, the more you're going to want rare things like a house by the sea, or maybe a yacht, or maybe a nice painting, or something which is hard to come by, a classical car. So the inflation rate is different for everybody. But what we have to realize is that if you're just the man in the street, the figure for the real inflation rate, there's two numbers. One is how much are your goods and services going up by, which is suppressed because it's all made by robots. And there's the other figure: how much are your savings, if you're putting money into the bank, being depreciated by the fact that everybody else is getting richer faster than you because they're printing money like there's no tomorrow.
Yeah, I agree. And he also said the other thing, he's going to end the electric vehicle mandate. So, because here, I heard that secondhand prices for EVs here in the UK are plummeting, because I think people realize that it's more practical to have a petrol or diesel run car because they last longer. I've heard that a lot of EVs, the batteries go bad, and you have to it costs a lot to replace them. And one thing though, he was saying, if you're a Chinese company and want to sell in the US, you need to come to the US and build a plant here. What about the US multinationals like Apple? They don't produce their iPhones in the US. Is he going to force them also to make their phones in the US? What about this shirt that I have? Is from an American company, but it's made in South Korea. Is he going to force them also, the American companies, to come home?
If you're a big company like Apple, I think you're to some extent dictating the rules, and they're probably not going to come down too hard on Apple. But your shirt manufacturer is a small guy probably, and they might well penalize that.
Yeah, that's right. Oh, Clive, I wanted to show you something. You might find this interesting because I mean, I was around then, but I didn't live in the UK. So someone's put on Instagram the cost of things 50 years ago. So 7 packets of crisps, 7p each. Uh, 3 loaves of bread, 14.5p each. 10 codfish fingers, 2 boxes, 25p each. So it's this person's part, what you could get for 50p 50 years ago. And now,
Yeah.
yeah, eggs haven't
Uh,
gone up that much.
I would have been 17 years old or 18 years old 50 years ago.
Yeah.
But I do recollect that when I was a little bit younger, maybe 10 years younger than that, the price of a Cadbury's bar of chocolate was just sixpence. That's 6 old pence, when in
Yeah.
the days when we had 240 pennies in a pound.
Yeah.
So with a pound, you could have bought 40 bars of chocolate.
Yeah.
Uh,
Do you think how what happened after decimalization? Like in 1971, I think it happened. The pound went from having 240p to 100p. Did that actually increase prices?
Well, as far as I was concerned, as a child, it was a scam, because
Hmm.
I used to buy something called I think it was called the penny jacks. They were little black licorice sweets.
Yeah.
And before decimalization, before 1970, you could get one of them for a penny. So they were a penny each, an old penny. So for £1, you could get 240 of them. Now, after decimalization, they were still called penny jacks, and they were slightly larger, but you could only get 100 of them for £1. In other words, they were still a penny. And so, as far as I'm concerned, and I think my mother said the same thing, a lot of things actually cost more after decimalization because they were still priced in pence. A bag of potatoes might have been 6 old pence, but after decimalization, a pound of potatoes was 6 new pence. In other words, it was 2.5 times as expensive.
So it's a bit like a reset or a way of
We did have quite high inflation at the time, but like today, the official number was not the true number. I mean, the man in the street, the housewife, would say prices are going up faster than they're telling us.
Yeah. So I guess no, it wasn't. It wasn't a reset. It was like a massive shrinkflation exercise because the penny jacks that you're talking about, they didn't go up in price, but you got 2.5 times less. So
That's
it
right.
was a shrinkflation in disguise, and I'm sure people didn't use that term back then. And Clive, you sent me a few pictures here, some cuttings, some newspapers, and the first one I'm going to bring up is the Herald Tribune, which was the paper I used to read when I lived in Switzerland, in Geneva. I used to like going to the sports section and the crossword puzzle. I don't know if they still do the Herald Tribune, but you wanted to talk about the stock market and what's going on.
Yeah. So the reason I brought this up is there are a lot of people talking about whether we're going to have a stock market crash. I'm not of the opinion that we will. I think that stocks will continue upwards, most likely, but obviously they don't go to the sky, and at some point things will go down, or they could crash. I don't think we're quite in that world yet, but the thing is, you never know when it's going to happen. But we're going back here to 1987, the 20th of October. This is the paper from the 20th of October, 1987, the day after Black Monday, when stock markets around the world collapsed by 30%. That collapse took place over Friday, Monday and Tuesday, depending on which part of the world you were and which time zone you're in. I think that day the Dow Jones Industrial Average fell by 22%, but it had fallen a lot on Friday and then again on Monday. And the reason I put that up is perhaps we could just look at the next paper. I don't know if you've got this one, Mario. If you have that one, which is called Record Falls on Wall Street.
I've got that one.
If you bring that one up, you'll see I put a little circle around the section called gold.
Yeah.
And that reads on the day. This is the day that the stocks went down 30%. It reads that gold rose $16.25 on the London bullion market to close at $481.
So that was up about 3.5%.
When everything else was dropping by 30% in a single day, gold was going through the roof. And why have I put that up? Well, I'm not predicting that there's going to be a crash, but those who fear that there might be, gold could well be a way to protect yourself. You put part of the portfolio in gold. So if the stocks crash, gold goes up, and one balances the other to some extent. And there was another, you bring this one up, but there was another article there on the same day. Precious metals. It reads, precious metals soar on stock plunge and Gulf attack.
Oh, there we go. Yeah, I've got that.
The Gulf attack was, I think that America had decided to attack Iran, and they'd sunk one of their drilling rigs, and Iran then declared war on America. I don't think anything came of that war because they never fired any bullets, but suddenly America and Iran were at war that day. But what then happened in the weeks which followed, well, this is a few days later, and the headline is dollar plunges as equity markets stay vulnerable.
I see. Yeah, the dollar.
And
Yeah. Oh, there we go. Yeah, it's kind of negating a lot of the narratives we hear now. A lot of people in the precious metal space, and also the dollar maximalists. They say, if we have a crash and a crisis, everyone's going to rush to the dollar. Gold is going to crash, but it doesn't happen all the time, right?
well, if we have a stock market crash, where's the money going to come from? It's going to come out of the mega caps in America. That's the biggest market in the
Yeah.
world. And people are going to be frightened, and the money's going to come home to other currencies, i.e., wherever they are, Switzerland or Europe or UK or Japan or wherever they are. So it would be quite normal that the dollar would fall if we have a global stock market crash.
Yeah. Oh, it's interesting here, Clive, that's the story about Lester Piggott. He was the jockey. He was jailed for 3 years.
Yeah, he was. That was quite a funny story. I think he forgot to tell the Inland Revenue (HMRC) that he'd won a few horse races, despite the fact he'd been on the TV winning them. So, so it just goes to show they might be watching your channel now, Mario. So let's be careful what we
All
say.
right, I pay my taxes anyway, so I thought.
And
Let's see, what else have we got? We had the gold price going up, the dollar going down. Um, and well, how much was the FT back then? Let's see. Have you got it with you?
oh yes, let me have a quick look. See the price. It was that's page 2. Look at this one. That's funny. They don't.
Oh, in Switzerland, it says it was 2 francs 20 on the top
Yeah.
side.
Yeah. I see the price. Actually, I've got. You can't see it here, but it's up in the corner here. You haven't got it on yours. Let me read it to you in the UK and the USA. USA, they charged $1,
Yeah.
and in the UK, they don't.
They don't have
Yeah.
it because I think
No.
this is the international edition. But I
Yeah.
remember the FT being 70p about 20 years ago. How much do you still buy the FT, like paper?
I have the digital online
Yeah,
version, and it's again, that's another example. It's probably less than paying 220 a day.
that's right.
I don't know what it is. Maybe it's 20 or 30 francs a month or something. But that's the way the world goes. So that's another example of things where, despite there's so much more money on the planet, it actually costs less than it did 50 years ago, 30 years ago. And it cost the paper less to make it.
Yeah. And the interesting thing is that this Iranian problem was was the same back then. It's the same now. It's almost as if they recycle it. That's why when they say, "Oh, we're gonna go to war with Iran," I'm never too sure about it. It's just something that they try to keep perpetuating.
Well, when there's bad news, try to distract the public's attention by some sort of event or war is a tactic which has been used by governments around the world ever since the beginning of time.
Yeah,
Blame our enemy for what's going on.
yeah. Oh, hold on. Here we go.
Silver consumption.
Yeah. Should we talk about that?
It's a chart I put together myself, and I took the numbers from the Silver Institute, which anyone can look up online, because they've got the supply and demand going back for 10 years, and you could actually find it earlier than that if you look carefully. On the chart, you see 2 lines. The blue line is the consumption of silver, excluding investments into gold, silver bars, and silver coins. So the blue line is heading upwards, and it's heading since 2020. It's been heading upwards pretty fast, and the reason it's being the consumption of silver is going up so fast is electronics, and in particular, photoelectric. But of course, electronics it doesn't just include it's electronics in general. We have more and more electrical components, and for precision, you need the highest speed and the lowest resistance, and silver is the thing which does that. So even though we're only talking about tiny specks of silver in your iPhone or whatever else, of course they have gold too in these things, it adds up. So the consumption of silver for electronic use has been rising by 20% a year, the consumption of silver for photovoltaic use last year, I think the figure was it rose by something like 47%. And the reason for that is it's not just about solar panels on your roof anymore. Photovoltaic is going into literally everything, whether it be battery chargers, whether it be watches or calculators, or all these IoT, Internet of Things, these things which sit on your wall and tell you the temperature. They're going into your car. Almost anything you buy could have, and more of them are having, solar cells, which will contain some sort of silver, some silver in that to generate the electricity to power the device. So photovoltaic last year went up by 47%, and that's what caused the continuation of the spike upwards. So the blue line that you're looking at is the consumption of silver. It's going up and up and up since 2015, and it's forecast to continue rising. On the other side, you see a green line of the mined production, and that's been heading down for the last decade, year after year after year. I mean, there's been a little bit of a dip in the middle around 2021, but the production of silver from mining is below where it was 10 years ago and is forecast to be lower again next year. And one of the reasons for that is most of the silver which is coming into the market from mining is coming from companies which mine something else. Of course, there are silver mines out there, plenty of them, but most of the silver reaching the market is coming from as a byproduct of some other metal mining. And therefore, it doesn't matter to a huge extent what the price of silver is. They're not going to expand their mining of the other product, and the other product's going up in price. So what we can see here in the year 2022, for the first time, and it's probably forever, but certainly the graph goes back to 2015, 7 years before that. In 2022, the consumption of silver for things like photoelectronics, photovoltaic and so forth, and electronics, was higher than the mined supply. So the difference was coming out of recycled silver. What does that mean? It means that the price of silver has to be higher, or was higher, and that we did in fact see that, so that it would suck out that recycled silver to fill the gap between the mine production and the consumption. And that gap got larger in 2023, and it's forecast to get much larger in 2024 and the years beyond. Of course, these are just forecasts, so we don't know that for sure. But the direction of travel, if you look at the blue line, the consumption, it's very steeply upwards, and I think that's going to continue. And the green line, it's the production of silver is of changing the amount of silver which comes out of the ground. It's relatively slow because it does take some years to bring on stream a new silver mine. So I don't think the downwards trend in silver mining will change very much, but I don't think the upwards trend in silver demand will change very much, which means that the gap between mined silver and consumed silver, the shortage, in other words, the shortage is going to get bigger and bigger. And the way to fill the gap is by you and I, Mario, popping down to our pawn shop to have the silver coins that we own melted down. So I guess you'll be saving the world by volunteering that.
No, definitely not. I'll be
I thought you would have.
I'll be doing the opposite. And the thing is, it doesn't even include investment in bars and coins. That discrepancy is probably a lot bigger. And people might be thinking, what about Trump just announced that he's going to end the green new scam, and he's going to end the EV mandate from day one. Wouldn't that affect demand for silver? Maybe a little bit, but I think a lot of the silver demand is coming from countries like India and China. So, and also, Clive, the silver mining, there's very few pure silver plays in the mining industry. And I've also read from Oriental Ghost, or Bai, he's on X, a Chinese guy. He follows silver a lot. And he wrote last year, I think, and I spoke about this, that countries like Mexico and China, I think or Mexico at least, and Poland, they're very big silver producers, uh, uh, their forecast for increasing silver reserves is not very good. So I think,
And of course, with that higher silver price, you can't exclude that there will be some strikes and things in the silver mines,
yeah.
which, if we do have a supply disruption, perhaps in Mexico, because of maybe, I have no idea about Mexico, whether they're well paid or not, but you can imagine that maybe there's some sort of disruption for some reason. With the shortage, it would force the price higher.
Yeah. Yeah, and that's interesting, and I think it's one of the reasons why I think silver is still really undervalued, especially against gold. Is that the way you're looking at it too?
Yeah, and perhaps I just talk about another thing. We have talked on this channel very often about gold and silver mining companies and the fact that they are very undervalued. If I could just share a chart with you here, Mario, which I don't think you've got, I'll just share that one if I can. Bear with me. Do you see that, Mario?
Yeah, yeah. Well, that's the silver mining consumption.
Oh, sorry, that wasn't the one I wanted to share. Beg your pardon. Where is it? This one. There. You see that now? The
Yeah, yeah,
gold.
yeah, yeah.
Right. Um, so what we see on this chart is the gold price, and the same applies to silver, by the way. But what we see on this chart is the gold price over the last decade or so is up 110%, 120%, whereas the two ETFs, the biggest ETFs which follow gold mining companies, the GDX, which is the large mining companies, the GDX ETF, and the GDXJ, which is the junior mining companies, they are both over the decade down 20%, and the other one down about 50%, compared with a gold price which is up 100% and something. So we could say that mining companies have not kept up with the gold price. And that's also true over the last couple of years. So I'd like to say something. A lot of people say, well, that's likely to continue because people are still going to be chasing the NASDAQ stocks and chasing their moving, and the gold mining stocks have never moved. And why would people go into something which is just not reacting? Well, I think there's two things here to say. And the first one is, if we do have a sudden collapse or decline in the Mag 7, the big cap American stocks, that money has to go somewhere. And it'll be looking for a home. And of course, one of those homes that it might find, it might look at obviously the gold price and the silver price have been rising over the last couple of years. They might say, that's moving. Maybe some of that money might find its way into the mining sector. What we're looking at now, Mario,
Yeah.
is the market cap of mining companies and the world's stock markets. Under the market cap of the gold mining sector, you can see the total gold mining sector has a market cap of 0.3 trillion or 300 billion.
Yeah.
The market cap of the world stock markets is 300 times that. It's about 109 trillion or 109,000 billion. And if I take the America's largest 10 companies, their market cap is around 19 trillion or 19,000 billion, compared with the 0.3 trillion of the gold mining sector. So all it would take would be a very small amount of the top 10 companies in America, talking at 2%, to buy up the entire value of the gold mining sector. So what I'm saying is, if we do have a crash, and I want to stress, I'm not forecasting this, but it is a possibility the higher we go. If we have a crash in the stocks, some of that money would be looking for a new home. And if only a small percent of that money, 1% or something, looks out and tries to find the gold mining sector, it would bring those undervaluations of the gold mining stocks back to a normal valuation.
Yeah, I mean, if let's say that world market cap 109 trillion, if 3% of that went to the gold mining stocks, that would be like a tenfold increase in the market cap. I mean, that's huge, and it doesn't take
That
much.
exactly. So the point is the sector is extremely small. It's undervalued, it's underwatched, and nobody's in it at the moment except a few people like you and I. But the vast majority did have it 10 years ago. They got bored with it because it was doing nothing. They sold it and bought what was actually moving, which is, we all know what that is. It's AI and big cap and technology. But those stocks, we all can see, and there are major organizations saying they've got ahead of themselves compared with small caps. Most big companies still like them and recommend them as investments, but the point is the valuations are becoming a little bit more stretched. And when that happens, there are vulnerabilities starting to emerge. But it doesn't mean to say they can't carry on for another decade. I mean, historically, we've had extremely long periods where things have stayed overvalued for extensive periods. 1994 to 2000 was one of those periods when, starting in 1994, things did look overvalued. The interest rates were going up, the dollar was too high, and yet it carried on for another 7 years until it crashed in 2000.
Yeah, and even Greenspan came out, I think, in 96 or 7. He said he talked about irrational exuberance, and the market still kept going up. But don't you think we're maybe more towards 1998 instead of 1994 in terms of overvaluation?
Yes, I think so. I mean, don't forget, we've had many years of rally since the bottom of the market was in March 2021. I think that was when we had the COVID crisis and everything collapsed in March 2021. So where are we now? We're three and a half years ahead. So yeah, it's a bit like being in 1997, 98. We might have another year and a half to go. I don't know, but I suppose my point is we're nearer the end than the beginning. The reason the big cap stocks are going up is a lot of people say, I'm not going to buy Apple, Nvidia, Microsoft, and all the others, Meta, because I missed the boat. And if I buy it now, I look like a fool. So no, I'm going to go and look for something which is going to perform well. They go out and they find a fund or an ETF which has got the best performance. They think, well, I'm no fool in going after these managers because they've got a really good performance, and they buy that ETF or that fund. But of course, that ETF or that fund actually has to own the largest stocks. So through the back door, they're buying the largest stocks anyway without really being conscious of the fact they're doing the very thing they said they didn't want to do. And that's what's driving, to a large extent, that's institutional money. That's money which is going in from robotic trading. It's driving the prices of the mega caps higher. I read an article the other day which said something like 80% of the trades are done by robots these days.
Yeah,
So it's amazing.
yeah.
But
Yeah, sorry, go ahead.
So that was my first point, that if money does move out of the mega caps into the gold mining sector, the gold mining stocks or the silver mining stocks could go a very long way. But there's a second point, which I think is a little bit overlooked. Now is an absolutely perfect time for the larger gold mining stocks companies to increase their reserves. And the way they do that is by finding a cash-strapped smaller company, one which has got lots of gold in the ground, but hasn't really got the money to get it out of the ground or get it out of the ground as fast as they would like. So if you're a major mining company, I can think of a few which have got this as an actual strategy. What you do, you look around for mining companies which have properties not too far from where your properties are, which need the cash, and which will only be too happy to have a bigger partner coming in to help them develop that mine. But obviously, they're they're buying the equity. But from the director's point of view of these smaller mining companies, they get to keep their jobs and get to have a bigger mine, or a faster working mine under their watch. So I think it's a perfect time for the large mining companies to be looking at the smaller mining companies and seeing what they could buy. And I'm expecting in the next couple of years, if things stay the way they are, a wave of mergers and acquisitions, because we've got low price mining companies in general and a much higher gold price. So what could be better if you're an acquirer? So I think that will be another thing driving gold mining and silver mining companies higher.
That should help the GDXJ more than the GDX, right?
Yes, and also in the silver miners, you've got the SILV, I think it is, which is the major silver miners, and you've got the SILJ, I think it is.
Yeah.
which owns the smaller silver miners. So logically, the smaller ones will be the biggest beneficiaries, the ones ending in J.
All right. Just wanted to end on the U.S. economy, and also there's calls now for quite a few cuts by the Fed by the end of the year, and I think the market is forecasting almost 100% chance of a cut in September. Some people are even speculating we might have a cut at the end of July. I think their July meeting is the 30th and the 31st. I've noticed numbers like the jobless claims and others are showing a weaker economy. There's a GDP, the preliminary GDP for the second quarter is coming out, I think, on the 25th, which is next Thursday. What's your view? Seeing that before you went away on holiday, I don't think it was as expected like this. And we also had Jay Powell saying that they might risk waiting too long to cut rates.
We're constantly seeing the landscape for when rate cuts will come changing. To start with, if you go back a year or so ago, they were imminent, and then they got pushed out further and further until at one point, we almost reached the point where there were going to be no cuts at all in 2024, when I think it started with something in the possibility of 4 or 5 earlier than that. Now we're starting to go the other direction with more cuts in 2024 and even more in 2025 is the way the market's thinking. So the latest number I saw was that, as you say, a rate cut in September is a dead cert. There's a possibility it might be in July anyway. Is it July? I think the next meeting. And there's a probability they think that there'll be another cut before the end of the year. So 2 cuts in 2024. And the latest figure I saw was market people who are in the market are talking about probably 4 cuts in 2025. Now that landscape can change, and obviously we've seen it changing in the past. But when you have the promise of interest rate cuts hanging over the market, it basically means that monetary conditions are easing, which is good for asset prices. And they have to do this really because right now the Treasury might have a bit of a funding problem. I mean, not right now, but down the line. And if the Treasury can borrow money at lower rates and lock it in for a long time, that would be better than having to pay even higher rates that were talked about 6 months or a year ago. So I think that's the landscape at the moment. But if we start to go back in the other direction, i.e. if inflation starts to bite and they start to talk about interest rate increases after the election, that would be a negative. But right now, the promise of interest rate cuts is a big positive for all kinds of assets, and that includes gold and silver, but it also includes stocks and property and anything else you think of. And it's also a big boon to the banks, which have had a bit of a rally, because if interest rates come down, it takes some of the pressure off on their commercial real estate loans.
Yeah, and also it helps their portfolio of bonds rally a little bit in price. Even though I think if they do cut aggressively towards the end of this year and next year, we could see the long-term interest rates remain quite high because I think investors will be concerned of inflation.
That would be called a steepening of the yield curve.
Yeah, steepening.
Traditionally, longer term rates are higher than short term rates, but up until recently, we've had, and I think it's still the case, I haven't checked today, the long term rates were below the short term rates, which was very unusual.
The other thing, Clive, that I was thinking is that it looks like Joe Biden is going to be dropped now. I mean, even Obama's calling for him to be dropped, Pelosi. So they're going to have a new candidate. And I don't think the Biden administration will have the raison d'etre, or they won't need to try to keep embellishing the statistics because he's going to be gone. So what I'm trying to say here, I think the BLS is going to come out and with a lot of revisions because they've been, in my opinion, keeping these numbers artificially high, especially the unemployment numbers and maybe even the GDP.
Well, the magic trick for the BLS is to do what they've been doing always, which is to lower the previous numbers to make the current numbers look better. So it wouldn't surprise me that the numbers continue to get fudged in the future. I think you've got to take everything with a pinch of salt when you read it. I mean, to some extent, it's correct, but there'll always be some sort of fudging that we can suspect. And but that, as you say, the incumbent, whoever is replacing Biden as the possible candidate, can say what happened in the past has nothing to do with me. Here's my promise for the future.
That's right. And just before we finish, there's another topic that people are talking about, and it's about a company, Austin Wealth Management. And apparently people found that they were short an equivalent of 12 million shares and through put options. And if you do the math, options for stock are 100 times. So if you buy one contract, and let's say if you buy a put on Amazon, one put, it gives you control of 100 shares. So 112 million is basically 120,000 options. And I saw that they put the trade on the 28th of June. So I think today the August options expire. So they had 3 weeks to go, the put options. And now they've come out, and I'll show it to you actually, because I don't want to. Let's see, Austin, I'll share it. Now they've come out here. Hold on, let's share it. Here we go. They've come out now, right, on the 17th. And they've said that it was an incorrect filing, that and it says here they put the trade on the 28th of June, and they amended it on the 16th of July. I started out in the business in Switzerland in a small fund manager private bank, and I started out in the back office. If there was some reconciliation problem, my bosses would have seen it the next day and would have said, "What have you done here?" And I would have to correct it. It wouldn't take almost a month to correct it. They're saying now that it was only 12 contracts and not 120,000. But some people might say, well, 120,000 is a lot. But no, if you're buying, let's say, a put option that expires in 3 weeks, let's say the Trump media stock is trading at $35 and you buy a 25 put, you're going to be paying maybe a dollar or two. You're not going to be paying much. So 12,000 options, 120,000 options is about $500,000 that you're going to pay. And you've got the potential to make hundreds of million if that stock drops, through the floor to, let's say, down 15. So I think it's a little bit suspicious. But and the other thing is people are saying that one of the major people in this Austin private wealth is James Baker III, who was the Secretary of State under George Bush Sr., and that both Bush Sr. and Bush Jr. Have had involvements with this company, and some people noted as well. I think Bush Sr. during the 2016 campaign, he did something like that during one of the debates about Trump. So just a little bit of fun. I think
Yes,
it's
clearly this company would have made a ton of money had the Trump media and technology group price dropped. I can't imagine any circumstances which would have caused that other than an assassination.
Yeah, yeah. But they're saying now that, I mean, do you think it's credible that it takes, they put the trades on the 28th and it takes them until the 16th of July to amend it?
Well, ever since the beginning of time, we've seen rogue traders who've been able, there's Jerome Kerviel, who cost BNP, I think, 6 billion or something, and then there was
Nick
Nick Leeson, who
Leeson.
cost
Yeah.
Barings, and there have been countless of these rogue traders who've been able to fudge or hide the truth from their investors, hide the truth from their directors for very long periods of time. It's not new that companies either have a rogue trader or don't tell the truth. I mean, you talk about not telling the truth. Look at what happened to Enron and WorldCom. They lied to their auditors, and they lied to the regulators, and they lied to their shareholders for years, and nobody noticed.
Yeah. So anyway, I thought that was interesting. And Clive, any final words as we wrap up here for the viewers?
Well, I'd like to wish everybody a happy summer holidays for those who haven't gone on holiday. Don't forget to give Barry his thumbs up and his likes. And if anyone wants to ask me any questions, I'm on LinkedIn. I get several questions a day on all kinds of topics. I've inherited some money from my grandmother, or should I sue my next door neighbor? I'm quite happy to give you a reply and tell you what I think. I can't give you investment advice. I'm not doing that, but I'm at least helping you see the way forward. So only via LinkedIn. That's the only way to get in touch with me. I'm not on Twitter or Facebook or anything like that. You're free to contact me if you have questions.
Yeah, that's Clive Thompson on LinkedIn. Okay, Clive, thank you and have a great weekend.
Thanks, Mario. Bye-bye.
Bye.